We need to get to one more pro trader on our show. Let's bring in Alan Knuckman, the Chief Market Strategist at Paradigm. Alan, the stock market, and especially the NASDAQ, tumbled this week. Give us some reasons not to panic.
Hello, Angie. We're seeing more market movement, so I've got to remind everybody, focus it on percentages, not points. Things are dramatically different than they've been. 400 points in the Dow now is 1%. And 50 points in the S&P is now that same 1%. We haven't had a 2% move in the longest period in history since the global financial crisis.
What's happening with your trades that you have in play right now? Bring us up to date.
All right, let's talk about the profit pause. We had 3 big winners last week. This week, with our new money management strategy, we were stopped out of Freeport-McMoRan. It did rally up where we were up 50%, but as per our new plan, if it loses 50%, we get out and we've exited that position.
Stopped out is one of your strategies as you always want to bank a profit. Explain why.
All right, I'm here to remind you, being stopped out is not a bad thing. It doesn't feel good. It's money, but we recover half of our funds, so we're ready to invest on the new opportunities and the new plays.
You are all about making money in the commodities market by using stocks connected to the commodities. What's your trade this week?
All right, let's talk about today's trade trigger. Today, we're looking at Alcoa, aluminum. AA is a symbol. So this stock has right now been trading between 25 and 45 for 1 year. So 35 is an important midpoint. It's also the breakout from April, and 33 is the 200-day moving average. So that should act as some solid support.
How has Alcoa performed this year?
So this stock is still up 40% on the year, and it's now 20% off the highs from back in May. So it's a good second chance play in Alcoa. It's 60% off its 2022 top.
Okay, let's get your way to play.
The way to play, I'm looking at an option here, a January call, a January 30 call is deep in the money. We're trading at about 34, so it's $4 in the money. That option's traded for about 6 or 7 as it stands. It's got 6 months of time, and if we get back to that 45 level, that option gains 100%.
Nice. How about your trading day takeaways?
All right, trading takeaway. Trading takeaway number 1, VIX mix. We saw the VIX rally up to 16 or 17 last week and then come back down to the 13 level. It's bounced back one more time to 17. So we're seeing a little bit more price volatility in that market measure. But let's be aware that 20 was the last high back in April, and we've been between roughly, let's just say 12 and 20 for many months. So until we get back above that level, we're still in a bull market mode, because every time it's popped up, we've seen the whack-a-mole smack back down. Number 2, go earnings. Earnings are about 20% through, 25% through for the quarter, and the S&P is showing earnings growth of 10%. So that's a double-digit number. That's very impressive. And number 3, as I always say, it's not how the market acts, it's how it reacts. So we've got go gaps up above in the S&P and the NDX. So if we fill in these gaps, that will give us another bullish boom breakout.
Always looking ahead, Alan. Thank you.
Thank you.
Go to businessfirstam.com for where to see our show on TV.